Dalal Street gains for the third straight week, records its biggest weekly gain in 4 months. The Nifty and the Sensex are up nearly 2 percentage points each. However, the Midcap index underperformed. On this week's edition of Editors Roundtable, we take stock of the week gone by. We decode the market action this Samvat. I am Reema Tendulkar. With me are Prashant and Nimesh, and joining us here in the studio is Sunil Singhania, founder of Abacus Asset Managers. Hi guys.
Good week, right?
Yeah, it's a good week. The mid-caps had a little bit of a...
Yeah. I mean, the mid and small cap has not done well. So portfolio level, it's not a great week, so to speak. But yeah, from a Nifty point of view, the shorts are getting covered. FIs are now coming back. There is a bit of cash buying as well. It feels good, right?
I mean, I thought you would start with how beautiful the office is looking, how different we are looking, and it does feel good.
And
right?
Sunil.
And Sunil, of course.
Oh,
Sunil, happy Diwali, Sunil.
Happy Diwali to all of you.
Wonderful. I think we've made a bit of a tradition with your sort of
You joining
I'm
us
missing Madhu today.
So how are things? I mean, it's been. I mean, people have been complaining it's been a bad year, etc. But
yeah.
If you actually tally the returns, there are lots of 20%, 30%, 40% kind of movers this year.
Yeah,
in 25.
That we come to know only in hindsight. Unfortunately. No, it's been a challenging year. Obviously, last 4 years was so good that expectations were very high. So, normally in a challenging year, you lose money. This time, even a flat year is looking like a challenging year. More importantly, because the alternatives, some other markets like China or Europe or even US and Japan and Hong Kong and Taiwan and Korea are doing well. Gold and silver are doing well. So obviously equity investors keep on comparing. Life is relative. So on a relative basis, people are unhappy, equity investors. But I think on an absolute basis, after 4 great years with so many challenges, I think it's not been a bad end.
Indians should not complain about gold at least. Gold to jewelry sabke paas hi hoga, right? I think
but what happens typically is the larger investors, their percentage allocation to gold is smaller. For smaller investors, the percentage allocation evens out.
Yeah, and it's still a store of value. It's not used to monetize, right? You're not going to sell it in that context.
That's fair. But Sunil, what's the setup looking like? We had a tough year, as you explained. Not much money has been made. But is the worst priced in? I mean, a lot of things are priced in now, and you feel there is a reason for investors to be bullish on equity?
No, so we were a little apprehensive since the last at least 15-18 months in terms of putting big money to work. But I think last 2-3 months we have started getting constructive. Okay. And I would say that other than the tariff issue, even 2-3 months back, things were falling in place.
Sure.
Both the government and RBI were working in unison. Both were focusing on increasing liquidity, increasing I would say the push towards getting consumption as well as capex back on track. World is a lot more peaceful, other than Russia, Ukraine. Most of the small conflicts, at least for now, are behind us, and to some extent we should give some credit to Trump. And even on the Ukraine and Russia thing, I think
looks like
there was a meeting done, and maybe some move we might have. I think even US, after the initial uncertainty, I think it looks like going into that rate cut kind of a mode, which normally is again good. So, and tariff also is a question of when rather than whether. Earnings are looking good. I was yesterday also traveling, and wherever I go, I ask around for leads on something. I think consumption has taken off really, really big time. So it's working. The RBI stimulus as well as the government stimulus is working on the ground. I think in India we need earnings growth, which was absent. So hopefully if December and March quarter earnings growth come back, and we are seeing now signs of more confidence coming in, then we should be back on track.
Okay. In your portfolio, can you tell us which were the big hits and the big misses of the last 1 year?
I hope there were more hits than misses, but luckily, at least, because of our cautious nature, we don't lose big time. So, the portfolios are pretty okay. I won't say that it was the best year. It was an okay year. But I think metals did well for us. Financials did well for us, particularly some niche financials and, the non-fund-based financials like some insurance companies, some savings/capital marketplace, they did well for us. There have been some niche stocks.
Can you name them?
Like, the metal pack, Sarda did well, Jindal Stainless did really, really well. NBFCs, I think IIFL after a bad year did very, very well. AB Capital was
I was to tell you, yeah.
Some, even on the wealth and asset management side, we have had some good picks. So it's been okay-ish here, but as I said, we
recently
did not
also
lose too much
You've not
in
lost.
any of the stocks, and that's why even in this a challenging year, we are okay.
You're also recently purchased in Edelweiss Financial.
So it's the same theme.
Same
See,
theme.
how do you make alpha? You can make alpha by being a little ahead or buying something where there is still a little bit of an apprehension. And, obviously you have to work hard. So I think some of these stocks where we believe that, maybe the worst is behind, upside might be a little bit away, but we don't mind waiting for it. But there is a big apprehension, and if we go right, the alpha can be huge. I think some calls we'll have to take.
Two pockets, Sunil, I want to take your view on. One is on the IPO market. A big frenzy, a lot of IPOs have come, but not everybody has made money in the IPO market. So that's one space. And second, which you normally don't talk about and where expertise like you come in, is the SME market, where you identify some good winners in the SME market as well. First on the IPOs, which leg are we? Are you now saying bad companies, bad valuation, or you're still saying good companies with bad valuations?
I think both. I would say bad company, bad valuations, maybe more on the smaller company side. On the larger company side, it's maybe decent companies, but with very bad valuation, not even bad valuation.
Sure.
But at the same time, there are pockets where, promoters are good, valuations are decent, business potential is good. So I would not say you write off every IPO.
What's your trademark for buying into an IPO? I mean, any red flags or any
Actually, Nimesh, you know us, we are so cautious.
Yeah.
We मधु के लैंग्वेज में है ना रुपए में 4 अट्ठन्नी नहीं 6 अट्ठन्नी चाहिए और आईपीओ में 2 अट्ठन्नी मिलती है और 2 चवन्नी मिलती है whatever मधु is good in all this. So I think even now the expectations of valuations are high, and the more important thing, Nimesh, is that in listed space you have a track record, you have history, you know what can happen. In IPOs you just have to believe on what promoters say. And whoever or whichever promoter comes to sell the IPO, their growth rates are 3 times the economy growth rates. So you believe in them, and you have to then take a call. I would say that this is also a time when one has to learn to say no.
Yeah. So exactly. So one should not have the FOMO of missing out on an IPO.
Yeah. And too much of effort and not too much of allocation if it's a good company. So better spend time more constructively.
Sure.
Sunil, you said you've been traveling and getting a sense that consumption is picking up. Which segments are you seeing this?
So it is very interesting. Yesterday I was in Chennai and I visited some investors, and they run a huge mall also. And footfalls have gone up like crazy. So Saturday, Sunday, there is no room to even stand. But interestingly, what they said, that conversion has increased. So earlier it was not that everyone was coming in to buy.
Not just window
Conversion has increased.
Yeah.
Food courts are a super hit because even those who don't want to buy, they have. And the other interesting thing was that the traditional anchor tenants are seeing some growth, but some new age brands which are predominantly focused to Gen Z segment, they are growing much faster.
Okay.
So maybe this fast fashion kind of stuff, and fast even personal care. There you are seeing more sort of growth on the absolute consumption side. Electronics is doing very, very well. Obviously, auto numbers we all know, but that is not a mall related. But even electronics is doing very, very well.
Traditionally we get a lot of feedback about autos, saying that maybe there is a small cars, the entry-level segment, two-wheelers, of course. Do you reckon this boost will be, because last month was a strange month because there was Shraddh and then there was pent-up thing which came into with the GST cut, etc. So it's kind of tough to know what was what. But do you think it'll give a durable fillip in autos, and which segments? Is it more two-wheelers, less four-wheelers?
So October has been also a good month because there has been a spillover of demand. Not everyone who wanted to buy was able to get delivery in that 7-8 days. But if you actually see, Prashant, last 8-10 years, the volume growth, both on the four-wheeler and two-wheeler, on the industry level, has been mid-single digits.
Yeah.
So I think structurally, at least we don't see that changing in a big manner. And that is the reason why the OEM autos, we don't have too much of an exposure except one company. We try to play it more through ancillaries and engineering companies, because structurally we are not growing beyond 5-6% if you put the entire auto segment in place. Obviously, this has been a case of GST cut, Even the auto companies passed on more than what they were passing on. There has been some benefit given in terms of lower interest rates also, so your EMIs to that extent come down. And generally, when you get that feel, अरे भाव कम हुआ, तो थोड़ा extra demand, automatically it comes. So in fact, that is another interesting thing which the mall guy was telling us, that every shop has put that earlier the price was this and now it is this. So it attracts. We all love to buy cheap. So I think in auto also that has been a big thing. And if it's a car of 30 lakhs, suddenly you feel, array 26, 27 mein mil raha hai. It's not changing per se, but the mindset becomes a little bit more attuned towards it. But I think structurally this segment cannot grow beyond 5-6% in volume terms. Obviously, if there is an up trading and you buy premiumization or something, then it's fine.
Please.
So what else are you buying now? You said over the last 2 or 3 months, after being cautious, you've sort of turned a little more positive, incrementally positive in the market.
So pharma is one space where we think it's a good time to accumulate. I think IT services, we are getting, like we are already underweight, but our view is that pharma presents a better risk reward compared to IT services. Maybe there might be a pop-up in IT services once the tariff issue is sorted out and some good comments on H1B or positive comments on H1B comes in. But volume growth guided by the large IT services companies 4-5%. Pharma even now growing at 12-15%. P multiples are similar. Size of opportunity is much larger from these levels for Indian pharma companies. So I think it's a mix of pharma, some domestic, some obviously.
But generics, the CDMO, is
I think you have to basically do stock specific, because every company has bits and pieces of everything. Just because someone is in CDMO, you give 50p multiple, and someone is in some other segment.
So which are the stocks that you have?
That's all in the portfolio, unfortunately.
One of his top bets, I think, is Jubilant Pharma. You guys have been.
Yeah, we have been positive for a long time.
Very
in the portfolio.
And Indigene is something I think you'll recently purchase.
Yeah, that's a part. I have colleagues also who manage funds. So.
Sunil, we'll talk about more sectors and all, but one thing I want to ask you for the benefit of the viewers as well. What has been the most satisfying decision for you this year? I know one could be that you're going to launch the mutual fund now, so congratulations on that. But
thank you.
From a either you've avoided and that worked for you, or you've bought and that worked for you, something which can be a bit of an interest for the viewer.
No, so mutual fund obviously is satisfying, but it is also sometimes you feel, array, kyun kiya? Because it's going to lead to more work.
More work and more.
But it's fine. We have a lot of
but
investors
you've always
who want
loved
us
to be a public manager,
give us
right?
50 lakh and 1 crore who would like to wait. So let us see. I think
you have that still ambition of doing the same what you did in Reliance Mutual Fund, from say 1 crore to some 100 crore.
Ambition is to manage money and invest till physically and mentally fit in whatever form.
Sure.
So I think this is also a good form.
What's the target for your team?
We don't actually have target. Our target is that if we do well for the investors, then every target will be surpassed. So when I started Abacus in 2018, not in the wildest dream we thought we would be $1 billion.
Yeah.
Now we are almost 5 billion.
Sure.
So targets are a function of the love and support you get, and love and support you get
only because of
by being good, fine.
Yeah,
but
absolutely.
Also,
absolutely.
So I think in terms of satisfaction, by nature, unfortunately, we are not very easily satisfied. So you always keep on figuring out why we missed. Like capital market plays, we could have had significant higher exposure. I'm just giving you a perspective. I think new age companies, I would say at the back of the mind, you feel that you could have done more because the view was quite positive. Unfortunately, or whatever, our philosophy is that we don't invest in loss-making companies and we stick to it.
Okay.
But somewhere our spendings are changing. Sure. So, I always tell that, what we were spending on 10 years back, what we were spending on 5 years back, what we are spending today, and what we will be spending on 5-10 years back is an indication of how the economy is moving and which companies and stocks will do well. So we've started doing a lot of work. I think a little bit of conservativeness helps, but in some cases, conservativeness also leads to misses
out. Yeah.
So it's fine. I think.
Just stay on. We need to slip into a mandatory break, but it's been a fascinating conversation. We'll come back for more.
Okay, welcome back. You're with us here on Editors Roundtable. We're in conversation with Sunil Singhania of Abacus. Sunil, thanks for waiting.
Thank you.
We're talking, I mean, it's a rich conversation with so much, sectoral views, what you like, what you don't like, hits, misses, etc. A lot of the focus now is on these new age kind of themes, and it's all obviously coming from the US and what's happening there, which is AI, and one allied kind of thing is the physical infrastructure, which is data centers,
Right.
etc., etc. I mean, just wanted your thoughts first, and then are there any plays that you like, or how to approach it?
No, so I think, Prashant, obviously things evolve. Human beings evolve, and we have evolved. So many things which we did not even think about 10, 20 years back, I think they have become a way of life for us. And there is nothing to take away. And I would say that all these themes have strong legs to go. Unfortunately, in India right now, other than these platform companies which we have, which are more services oriented, we don't have too many direct plays. Obviously, some companies on the data center infrastructure side and all are trying, and they're doing also well, but these are still smaller companies or ancillary companies.
Right.
But it will evolve. On the AI space, I don't see any clear opportunity. Now, we can all say, even I use AI for my research, but I am not an AI-focused AMC. I'm just giving you a perspective. So every company will use AI. It will evolve. I think right now one should not just jump into anything just because it seems to be an AI play. But I think on the new age technology companies, as I said, we are very conservative, so we don't invest in loss-making companies. But the good thing is that most entrepreneurs are now clear that ultimately they have to build businesses to make profits, not only look at market cap. Because if there are no profits, that market cap is transient, it might just disappear. And good thing is that many companies now have positive unit economics. What it means is that they don't need capital to survive. If they get capital, they will grow. But for survival, capital is not needed. So the chances of them going belly up have reduced quite significantly. And our habits have also increased. I was just reading the number of parcels which have been delivered in this 1 week, 10 days, and the number of orders which this Amazon sale or some Flipkart sale has generated, or even the number of transactions which Paytm processes or UPI does or something. I think they are all crazy, and they're only going to increase. I would say a lot of these capital market plays are also technically platform companies.
Absolutely.
So that segment right now has, I would say, more clearer opportunities. Maybe data center, hardware side, there are some opportunities. AI space is still nascent, at least on the listed space.
And on the capital markets, which segment do you think, I mean, is it where you have a bit of, I mean, the way to do it is to have a...
Unfortunately, we were very early investor in the listed exchange, and we got out early because we made a lot of money and we never thought it will grow. But see, every segment has niches. So exchanges, there is an entry barrier, obviously. Depository, there is an entry barrier. There are only 2 depository. RTAs, there are only 2 significant RTAs. So there is an entry barrier. I think wealth management companies, more are coming. But those who already have created asset bases, asset management companies, those who have already created asset bases, phenomenal runway. We are ourselves an asset management company, and you can see it. Particularly, this is the only business. बोलते हैं ना, double engine का growth है. Your assets go up because of fresh flows and also because of appreciation of the existing assets. So without, this is the only sector which visibly can grow 20-25% for the next 10 years.
Yeah.
Without any fresh need of capital.
Yeah. And non-linear, I mean, the same assets can grow, but the team has to, I mean, there's no real...
It might be a little bit volatile. Like last year, the asset growth might be slower because on this returns growth has not contributed as much. But I think this is a great...
And you're comfortable with the valuations for the companies
So some
right now?
companies, there is still potential. But see, valuations, actually, most of these companies have doubled last 6-8 months.
Yeah.
So the market gave us an opportunity. It's not that it didn't give us an opportunity. Maybe it might give some opportunity again. So either there might be some time correction or the growth rates might surprise us on the upside. So if markets start to do well and you start to see 12-15% returns, then that growth will automatically increase because you'll have more flows also coming in and this also adding. I would say this is a good allocation sector which will not give you stress, and it can surprise on the upside.
Cyril, what about real estate? Because this year was a bit tough. I could see even something like Godrej Properties is down 30% from the peak this year. most of the real estate names are down 20, 30, 40%. Generally, you're comfortable with that space, given that there is RERA now, given there is the balance sheets are quite strong now?
Actually, we have very small exposure to that space.
Okay.
And that also is, frankly, trying to just play on the luxury consumption side, I'll be very honest. Because none of the real estate companies or most of them don't qualify in our ROC framework.
Yeah.
But what has happened, Nimesh, is that obviously real estate had a great run. But now we have reached a point where price appreciation looks very tough. And obviously, a lot of these companies had older land bank or developmental rights. So the margin on that was significant.
Yeah.
Because you had old raw material and you're selling at current price.
Yeah.
Now you're buying at
New.
current raw material prices and you're selling at the current price. And prices don't seem to be going up. The other thing is supply is increased dramatically. Because every building in Mumbai wants to redevelop.
Yeah.
Every small, big, large, Malad, Kandivali, Andheri, Bandra, Malabar Hill, Walkeshwar, everyone wants to.
No, and there will be a big supply from Dharavi as well, right? As in when Dharavi gets developed.
So I think in
there will be a big supply.
very near term, ready apartments, there is still a problem. But in the next 2-3 years, when some of these projects start to see the light of the day and get constructed, I think you will have, I personally believe 3-4 years of not too much of value growth. And I think the markets are maybe, taking that into consideration.
All right. We'll leave the conversation here. Thank you once again for joining us here in the studio. And season's greetings.
Happy Diwali to you and all the viewers
and the
of
Abacus
CNBC
family
TV.
also.
Thank you. Thank you.
Well, thank you very much for watching this show. Wish you guys a very happy Dhanteras. We'll join you on Monday morning.